Hello and welcome everyone to the week ahead commodity reports, where we of course will be reviewing the markets for the week ahead. So as we come to the end of the second quarter and head into the second half of 2021, infrastructure spending and inflation are now the major themes that are beginning to rapidly dominate and drive the financial markets. Now, last week, President Joe Biden announced his ambitious $1 trillion green energy and infrastructure spending plan to transform the US economy. The $1.2 trillion infrastructure package that will involve pumping hundreds of billions of dollars into improving the nation's aging roads, bridges, railways, airports, power grid, internet services and cellular network. One of the highlights of Joe Biden's plan is a $15 billion investment into electric vehicles and related infrastructure, with the goal to build a national network of 500,000 electrical vehicle charging stations by 2030. Joe Biden's massive green energy and infrastructure spending boom ultimately means that the US is going to need more commodities and lots of them, specifically industrial metals, which includes copper, palladium, platinum, silver, lithium, nickel, iron ore, and rare earth metals for batteries and 5G technology. However, supply is limited, so as Joe Biden descends on the nation's biggest commodity buying spree in history, this should inevitably add further bullish momentum to commodity supercycle as demand outstrips supply this year. Now, just moments after President Joe Biden declared we have a deal, silver prices they rallied back above $26 per ounce. Meanwhile, the biggest moves were on copper and palladium prices, which notched up further gains to trade not far off their recent 10-year highs. Elsewhere, oil prices, which are a key indicator of rising inflation, gained for a fifth straight week to post their biggest quarterly advance since 2010. Brent hit $76 a barrel, whilst WTI crude oil surged above $74 per barrel. Oil prices could now be on track to hit $100 a barrel in the second half of 2021 as inflation continues to surge. Now, looking ahead to next week, all eyes will be on Friday's non-farm payroll data. The other big market moving events next week will include ISM manufacturing PMI and CB consumer confidence data. Now, lastly, we have the Basel III agreement, which comes into force on June the 28th for European banks and then on the 1st of July for US banks, and this will be watched very closely. Under that new regulation, gold is being reclassified from a tier 3 asset to a tier 1 asset. That change will make gold more expensive to buy and sell, potentially creating a liquidity squeeze that could generate massive moves in the market and lead to higher spot prices ahead. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. Firstly, if we have a look at platinum here and the industrial metals, in fact, let's move it over to palladium as well. So palladium, last week we identified with you a massive buy opportunity on this market after we had more than a 3,800 point sell-off after the FOMC statement. So we actually capitalized on this last week, building two positions into this market, then closing out partial profits for 3,000 points here on Friday with our clients at the Gold and Silver Club. So as you may know, for every one lot contract that you would be trading, that's $30,000 of profit. For every 10 lot contract that you would be trading, that's $300,000 of profit, and that's just within the matter of a few days. You could have capitalized on that easily just last week. We've seen a 3,000 point move to the upside across our two positions in this market. Not only that though, we also capitalized on platinum last week. We have two positions right now. We banked 700 points last week on this market. It's looking really strong as we go into next week. We've essentially seen slingshot moves higher for copper and also silver and gold prices in the last week, which we identified with you on the previous week ahead commodity report. So with that, let's go through this in a bit more detail. And actually, finally, whilst we're at it, we hit our profit target last week on the energy markets with the surge that we saw on Friday. This actually banked us over 10,000 points. So we've continued to run up with the energies here over the last couple of months. That was a massive windfall profit for us on Friday with the energies and also banking partial profits on palladium. That netted ourselves and our clients at the Gold and Silver Club over 13,000 points of profit, which was a massive windfall there on Friday. But of course, going into next week, there's still lots more big opportunities. So let's just take it back to a couple of the industrial metals here. So first of all, platinum, we actually added to this position twice in the last week, caught it really nice and low here after we had the FOMC statement sell-off. As we mentioned previously, this was a gift in the market, this massive sell-off to the downside. You wanted to capitalize on that, buy in on the dips. Nothing has ultimately changed. We saw 1.2 trillion in stimulus get approved last week with a new deal from the Joe Biden administration, and with that catapulted industrial metals higher here. So we've certainly benefited from that on platinum. So as we go into next week, seeing as we have two positions on this market already, we are expecting further upside or retracement back towards the midpoint here that was broken down from at the beginning of June. So we're ultimately staying long this market, expecting it to do well as we transition into the month of July. Moving over again to palladium, this has had a really solid price structure over the last week here. We've seen a decent breakout to the upside after we had a retest of 2,450. We had three tests into that zone, which then got very well supported and gave us an opportunity to capitalize on that over the last week. So we'll remain in our positions on this market going into next week. And then let's bring it over to gold and silver. So as we mentioned, Basel III regulation will get implemented in Europe on Monday, and then it will get implemented in the USA next week on Thursday, on the 1st of July. Plus, on Thursday, you have a new quarter where you typically get fresh capital coming into the market. I would definitely look out for that being a potential turning point higher for precious metals such as gold and silver. Then, of course, on Friday, you've got the non-farm payroll data as well, which can be a catalyst for big moves in the market. But the Basel III regulation for next week into gold will be a massive event. I would keep a very close eye on that. Right now, we're observing out there that many traders are getting quite bearish on gold right now. The sentiment has dropped down to the lowest levels in a year. However, we've continued to capitalize on the recent sell-off here. We built into two positions in the last week. You can see overall gold has closed positive for the week. So what I'm looking at as we go into next week, I can't rule out that the beginning of the week, being that it's the end of the quarter over Monday, Tuesday and Wednesday, it's possible you get a bit more consolidation. You can't completely rule out a retest back towards the swing lows. However, I would be more in favor by the end of next week, especially once we get into the beginning of a new quarter. From Thursday, the 1st of July onwards, I am looking at upside on gold. Now, we might see that immediately off the open on Sunday and then start to drive higher, in which case we do have exposure. We built into gold again in the last week here. We'll do very well if we see this sort of price action to the upside here for gold. This would be the expectation as we go into next week. Ultimately, we are expecting Basel III regulation to be a bullish event for gold. It's possible that you could get some choppy price action between Monday and Wednesday because it is the end of a quarter, so you could see some outflows in the market. But then from Thursday, the 1st of July onwards, I would expect strength to come into the gold market. Then if we have a look at silver here as well, silver, we've continued to build positions into this market. Again, the Basel III regulation will affect this too. I am expecting silver to do well as we go into next week. I mentioned on silver asset of the day that below $26 per ounce, we do like this market for a buy all the way down to $25 per ounce if we were to get it. We haven't really seen much of a sell-off last week. The lowest that silver got down to was $25.50 per ounce. We're building up a solid base at the moment on this market. Also, just drop it into the weekly chart here where we are getting a reversal around that $26 per ounce handle. So ultimately, at this zone, we are buyers. We've continued to accumulate positions in the last week on the big sell-off to the downside. Once we can clear above the neckline, once we break above the highs from Wednesday, Thursday and Friday, and we close above those levels, that's where I would expect this market to really begin that momentum. And typically as you go into the third quarter, especially from July the 1st onwards, you would expect silver, gold to do well. So this would be my expectation as we continue into the month of July. Just be mindful you could see some choppy price action at the beginning of the week due to it being the end of a quarter. Then also moving over to copper here. So copper, we've capitalized on this. We continue to remain in our long position on this market. Again, at the beginning of the week, very simply, all we saw here was a stop hunt for copper, taking out any stop losses which would have resided below the lows that we saw from Friday on the sell-off after the FOMC statement. And very quickly, we've seen a strong reversal on this market. This was further helped by the infrastructure spending deal, which was announced last week as well. So all of this has played really positively into our positioning with the industrial metals, with palladium, platinum, copper all taking off to the upside. Now you have gold and silver slightly lagging behind, but again, as you go into next week, we do have the Basel III regulation, which could also be a major catalyst. Again, that gets implemented in Europe on Monday and the USA on Thursday, and from Thursday onwards, it's a new quarter where fresh capital will come into the market, and we are expecting Q2 to be very lucrative here for commodities trading. If you follow the wrong strategy using outdated technical analysis or gimmicky indicators, you can end up wasting a lot of time, money, and effort and have no results to show for all of your hard work. This is not a buy and hold market right now. We're in a low interest rate and high inflationary environment combined with higher than usual volatility, which is here to stay. Low interest rates mixed with surging inflation, that's a lethal cocktail that's guaranteed to erode the value of your investment returns if all you do is buy and hold in this market. So don't get lazy and let inflation devalue your money that you've worked hard for. So with that, if you would like to join a community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel, that way you're always kept updated with all of the latest commodity reports.